That kid's fine.
Never got along with her husband.
So she has a husband. One day while she was at work, he packed up and disappeared.
He didn't want a baby. But she went after him, even pregnant like that.
We hadn't heard from her in months, and then today we saw her picture on TV.
This was Mary Ann Linfield, if she was a daughter. Well, we know this is different than her chin, but they said that her face had been, changed.
Do you have the new daughter's blood type?
She's B positive.
Any medical conditions, surgeries we should know about?
She had her tonsils out when she was 12.
What's her first name? Shannon.
Ask some questions.
Susan. Hi. Is it a bad time? I know you're always busy. Yeah, no, I was here at work all day. I was, I really just love to talk. I looked at my time. I'm sorry. This is too much. Way too much. You keep showing up. I cannot be your daughter before you carry a case or anything. Try nothing.
Sir.
Stop moving. Just stop.
CVS.
Glad shot.
Get some people in here. Yeah, make sure I ask some questions too.
Discharge meds 1 and 3 2 weeks of social work. I think it's an hour and not. So on with Stevens is none of your concern. What is your concern? Sick people, all these sick people, until I get back, understand? Okay. Just here comes.
So I'll make sure I ask some questions. 1 second. We have our chart right here. Just give me 1 second. But y'all ask some questions, guys. And I don't know what y'all don't know, so if y'all ask some questions, I can kind of, show y'all some stuff. If y'all don't ask any questions, I ain't gonna know what to show y'all. So y'all make sure y'all ask some questions.
Sure. Anything else I can help you with, Dr. Stone?
No, all good.
Yeah, 75.
Wingman.
And it's in there.
75. Alright. Yeah, just ask some questions and I can really get started and show y'all some stuff. Like what y'all might be looking at or how y'all should set up, something y'all don't get about options, you know, something like that, you know, and I can really show y'all anything about that. But this is basically what I look at right here, you know, determine if, you know, if something's going to go up or if it's going to go down. So that is something I look at. Yeah, you can open it on your laptop. Either one is really fine. I really say do it on the laptop. It's a lot easier to work through on the laptop. And just let me know when y'all ready. And this right here, that was. That's crazy. Alright, so basically, TradingView, I'm gonna open up another chart layout. So right here is my new chart layout. You see that right there. So this is probably what y'all see. You know, you can either have it in the dark theme mode, you can have it in dark theme mode, or you can have it in, you know, in this mode right here. Either one, you know, whatever you prefer. You know, I just prefer the darker theme because, you know, that's just something I prefer. You know, just really go off views. But really the only, you can do a lot of stuff on TradingView, like with coding and stuff. But really the only thing I use it for is, you know, is to look at, you know, one chart, specifically one chart. That's the only reason I look at it. But basically, you know, y'all want to learn about the charts first. So y'all want to learn about the charts first. And basically, this is all y'all really see on Robinhood. This is all y'all really see. I just see the share price. I don't see, you know, nothing else but the share price. You know. And then on here, just with the indicators, you know, you see the share price with the indicators, and you know, you kind of give a prediction of, you know, what's gonna happen. You know, nothing's gonna be, you know, 100%, but you can kind of give a guess what's gonna happen. And that's the biggest thing. You can guess what's gonna happen, you know, in the next minute or the next day. You know, you can make money off of guessing. You know, just to educated guess, give you a better educated guess. So that's that. But anyways, the first thing y'all want to know about, you know, the first thing I want to know about, you know, what is you know, what are indicators, what is technical analysis, you know, and I can just pull up a video right here. I'm gonna look for a short little video so I don't waste too much time. Alright, that's a 9-minute video, but we can do this one from TD. So this is just to tell you, you know, basically what technical analysis is. You know, this is basically, this video just tell you what technical analysis is. Let's see.
Might sound a little, well, technical, but it's actually pretty simple. Essentially, it's a strategy an investor may use to examine an investment's chart in an attempt to forecast its future performance. Some investors may use technical analysis to attempt to identify when to enter or exit a stock position. When performing technical analysis, investors can use a variety of techniques and tools to analyze a chart. In this video, we'll focus on a few technical analysis basics, including trend, support and resistance, price patterns, and technical indicators. Let's start with the first technique, trend. Trend is the general direction a stock's price is moving. There are three kinds of trends: Up, which is a series of higher highs and higher lows. Down, which is a series of lower highs and lower lows. And sideways, which has roughly equal highs and lows. Some investors determine a stock's trend by identifying the direction of its highs and lows. Trend may be important because many investors believe that a stock will generally continue in the same direction it's been going. These investors would anticipate a stock with a strong uptrend to continue to rise, while one with a strong downtrend will continue to fall. Some investors draw lines to attempt to identify the trend. Investors can also draw lines to connect highs and lows. These lines are known as support and resistance levels, the next technique we'll discuss. Support and resistance are price levels that the stock has had trouble breaking through. If a stock breaks through support or resistance, it could be a signal to enter or exit. For example, suppose a stock breaks through resistance, which is a level it repeatedly pulled back from in the past. Because it broke through resistance, an investor may believe that there's a good chance that the stock will continue to rise. So, broken resistance may be a good time to enter. On the other hand, if the stock fell past a support area, it may continue to fall. This could be considered a good time to exit. After connecting support and resistance levels, a stock's price movement may resemble a certain shape. These shapes are called price patterns and are another technical analysis technique. Price patterns can build on support and resistance, allowing investors to attempt to predict more specific movements and try to point out even more precise entry and exit signals. There are many different price patterns. Some examples include simple shapes like triangles or flags, and more complex patterns like head and shoulders or triple tops. Let's look at an example. This is called an ascending triangle, and it forms when a stock's highs are hitting resistance, while its lows are steadily rising. Some investors might interpret the narrowing between the highs and lows as a signal that the stock's about to break through resistance. If it does, the stock's price is expected to rise in value right after the breakout. But not all investors exclusively use support and resistance and price patterns. Drawing lines and finding shapes can be subjective. Because of this, some investors may use technical indicators. Technical indicators are graphical representations of chart data. Each indicator displays chart data, like price and volume, in a unique way, giving investors another perspective of the stock's performance. Because technical indicators are created using formulas and data, they may give investors a more objective way to examine a stock's performance. A common technical indicator is a moving average line. This indicator averages the stock's price over a period of time and plots it as a line, which can help determine the overall trend. Moving averages can be calculated for any period of time, but one of the most common is 50 days. So what does a moving average tell you about an investment? Imagine a stock's price crosses above its 50-day moving average. This may indicate that the stock is outperforming its recent history. This could be an entry signal. Similarly, if the stock begins to fall and dips below its moving average, it could be an exit signal. Moving average lines are only one of many technical indicators investors may use. Other common indicators include price envelopes, Bollinger Bands, stochastic oscillators, and the relative strength index. At this point, you've covered some basics of technical analysis. One thing to keep in mind is that technical analysis can help you identify potential entry and exit signals, but it offers no guarantee of success. After all, there is no way to predict the future. We've only covered the tip of the technical analysis iceberg. Learning how to use the techniques and tools we've discussed, as well as the many others out there, can advance your technical analysis skills.
Yeah, so that video is that. So basically, like I was showing you with this, they just showed you one, So what you want to go do to set up a indicator, you have to go to this FX. It should say FX. It's the FX right here, and this just says indicators and strategies you want to use. So what you'll do with that, you'll click on indicators, and once you click on indicators, you want to have the built-in selected. And one of the ones they're talking about was the moving average. So you have a 20-day moving average, a 50-day moving average, and then a 200-day moving average. Those are the three most common ones that you'll end up using most likely. And then you have a 9-day moving average as well. But basically, the longer the period time is, it gives longer the trend. And I'll show you what I really mean by that. So I'll just click moving average right here. So basically, let's change the color. We can change the color of the moving average. You see this line right here. So that's our moving average indicator, that blue line right here. That's our moving average indicator right here. And then we have another blue line, which is the share price. And what I really do, I change the color. So right here you'll see, I have different color indicators, well, different color moving averages. So I have a blue one, which is my 9-day. I have a green one, which is my 20-day moving average. And I have a red one, which is my 50-day moving average. And then I have my white line. You'll see this white line right here. So this white line shows my, my 200-day moving average. So those are the 4 moving averages I use. My 9-day, 20-day, my 50-day, and my 200-day moving average. But I'm gonna change this to the color green. So I wanna, if you had the same lines, like if all of these were, the same color, I wouldn't know which one was, which day moving average. Just to, organize really. So I changed the colors of them. So I'll come right here to change the color. I'll come right here. It says MA. So I'll come right here. And then I'll click on settings. And then once I go to settings, I'll have style. And this style is just, what color. You want your moving average. So right here I'll click my blue right here, and I'll change it green for my 20-day moving average. I'm finna use a 20-day moving average, and I'll use the green right here. So I'll go back, and then I'll come back to inputs, and basically, I don't know, offset and stuff like that, I don't really know what I mean, but I know the length is like, how many days, what day moving average, And then the moving averages, I think they get the closing price from the last 20 days. They get the closing price from the last 20 days. And then they divide it by 20. So that's the moving average. And then they plot the points. And then they'll plot the points, right here. So these are points. So you'll see right now mine is at 9-day. It's a 9-day length right here. So what I'm going to end up doing, I'm going to change it to, you see these green lines. That's my 9-day. I have it listed as 9 days. But I want to change it to 20. Just set up my 20-day moving average. So I will set up my 20-day moving average. And you see right here where it just changed. It just changed right here. Where the plots are pointed at, it just changed. And I kind of give a I'll show y'all a video of what a moving average is. My bad. And then there's different type of moving averages too. So it's, you have exponential, and then, you have simple moving average. But right now I'm going to just get into, what, a regular moving average is. Okay, yours doesn't look like mine. Is yours, let's see. Is yours white or dark? Because right here you can change the settings. So, but you can, oh, I see what you're saying. Let's see. So I'm gonna go to the main menu real quick. So what it looks like, so I'll go to trading view, click on trading view, and then right here, that's probably what y'all have popped up. So what you'll want to do, this is just, little, I say spots you can click, to show. I don't really know what the rest of this is. I really just click on charts, to be honest with y'all, because that's the only reason I use this is to, look at my charts. There's probably a lot more stuff you can do, You know, there's a lot more stuff that you can do, but the biggest thing, I just look at my charts. You know. So right here, from right here, I just click on my chart. I click on chart, and then it should pop up to something like this. So that's what happens. Alright, you fixed it already. Alright. So I'm gonna get back to what is a moving average, and basically, you know, like I was saying, a moving average, you know, they add up the past 20 days that already went by, and then they divide it by 20. And that's what plots the point right here. You know, so that's literally what they do. Well, let's see. I'm gonna just show y'all this little video right here. It's a 4-minute little video. You know, and then, you know, other things. You know, when I say, you know, it's trending for it to keep trending. So y'all see, you know, right here, this is our share price right here. You see it bouncing up and down, and then it pops up. And as soon as it pops up above our 20-day moving average, it starts to buy signal. So it's giving me, okay, we need to buy this. You know, that's what it's saying when it popped up like that. It's saying we need to buy this. It's just, you know, from past history, you know, it's starting to uptrend. As soon as it pops up like this and passes our 20-day moving average, it starts to buy signal for a trend up. And you see from right here, once it did that, you know, the next day it trended up. So that's just what that is. And for it to, you know, keep trending, it has to, you know, you'll see a lot of, you know, you'll see a lot of times where our share price, it bounces on our moving average every time to keep moving. So right here you see it bounce up, gives our trend, and then right here it drops back down, and most likely right here this is where it's overbought at. So it has to come back down. If something's too overbought, it has to come back down. So it'll come back down to our moving average, and then either pass it and start a downtrend, or it'll pop back up, bounce back up off our moving average and start an uptrend. Right here you see on CVS, you know, it started an uptrend. But basically I'm gonna just show y'all a video, you know, y'all kind of understand.
The moving average is one of the most commonly used technical indicators. If you've spent even a little time looking at price charts, you will have noticed that most often the price of an instrument will move up and down. In fast-moving markets, you may find that the price may be surging up only to plummet moments later before surging up again, increasing the potential for false signals. The moving average can help filter out the noise from random price movements and smooth it out in order to see the average value. Moving averages are used to identify trends and confirm reversals. When the price is above the moving average line, we consider the instrument to be in an uptrend. Conversely, if the price is below the moving average line, we consider it to be in a downtrend. The breaking of the moving average line usually implies a trend reversal. Moving averages are also used to identify areas of support and resistance. Many traders will consider the moving average line as a support and resistance level indicator and base trades on it. So traders will check to see whether the price is going towards the moving average and see whether it will bounce back from it or break it, as with regular support and resistance level. Oftentimes, the price of an instrument will find support at the moving average line when the trend is up, and will find resistance at the moving average line when the trend is down. So moving averages will tell you whether an instrument is trending up, down, or if it's ranging. It can tell you if a trend is still in motion and whether it is reversing or losing momentum. Have in mind that a moving average is based on past prices and is known as a lagging indicator. Therefore, it will not warn you in advance, but it will confirm when a trend change has taken place. At the most basic level, when the price crosses up and over the moving average, traders take this as a signal to buy. When it crosses down under the moving average line, they consider it a signal to sell. Let's take a look at the types of moving averages. There are three main types: simple, weighted, and exponential. We will discuss the simple moving average, or SMA, first, and show you how it's calculated so that you can adjust it according to the given market circumstance. So if you wanted to plot a 10-day simple moving average, you would add the closing prices of the last 10 days and divide by 10. This calculation gives equal weight to each day. It's called a moving average as the oldest price is dropped each time a new period becomes available, in this way ensuring that the average is based only on the last X number of periods, in our example for the last 10 days. Have in mind that the longer the simple moving average period, the more it lags and the slower it is to react to the most recent price movement. And this brings us to its downside. As equal weight is given to all periods considered in the calculation, the simple moving average is slower to respond to rapid price changes that might prove to be important. So how can you counter this? With another type of moving average, either a weighted or an exponential moving average. The weighted and exponential moving averages are calculated differently from one another, but both types give more weight to recent periods and thus more emphasis on what traders are doing at the moment. So as a result, weighted and exponential moving averages respond faster to price action by distributing more weight to recent periods and less to older periods. They reflect a quicker shift in sentiment, which can be due to changes in supply and demand or important news events that impact the traded instrument. To illustrate what we mean, if you were to plot an exponential moving average and a simple moving average on a chart, you will see that the exponential moving average is closer to the current price than the simple moving average. Apart from the type of moving average, you also have to decide on the time period. This will largely depend on the type of trend you are analyzing. Here are some guidelines for commonly used time periods. 10 to 20 for short-term trends, 50 for mid-term, and 200 for long-term trends are typically used. When and how should you use moving averages? Deciding which moving average to use and the time period will depend largely on your objective. Use exponential moving averages for shorter time frames, or if you're analyzing a fast-moving market, as you'd have more emphasis on the latest prices. Use simple moving averages if you are planning on holding a position for a longer period of time, as the exponential moving average might be too sensitive and give false signals. You should also use simple moving averages if you'd just like to filter out the noise from random price fluctuations to determine the overall market direction. Thank you for watching this tutorial on moving averages. Our next...
Yeah, that's just giving a list of, what the different moving averages are. So that's the biggest thing you gotta take. But yes, that video is just showing, the different type of moving averages. But like I was saying, we're gonna stick with MA, but that gives you an idea, what, the different moving averages are. And basically right here, all you doing right here, so, we'll go, back some and I'll say, I'll come right here. And like I was saying from before, we started the uptrend when it passed our 20-day moving average, and then you see right here where we keep bouncing up off our 20-day moving average to start to start going back up. But basically right here you see on our 20-day moving average, our share price drops below our 20-day moving average, and then you see right here, from right here to right here, that's a downtrend. From right here to right here, and as soon as our share price drops below our 20-day moving average, it starts a downtrend. We get a signal for a downtrend, and that's what that is right there. And like they're saying, the 20-day just gives more of a short period trend. 50-day gives a medium period trend, and 200 MA gives a longer period trend, a long-term period trend. I'm gonna set up these other indicators. So we'll add our 20-day moving average, our 50-day moving average, and then our 200-day moving average. And what you'll do the same thing, you're trying to find your moving average. So we'll just do the same thing, type in MA, that's what I call it, MA, but it stands for moving average. So I'll click moving average, and then right here we get another moving average, and then it automatically gives us a 9-day moving average. Let's see. with the 9-day moving average. Our blue line right here. This is our blue line. Our 9-day moving average is a shorter time period for our trend. So it's more when it crosses right here, we get an uptrend, and it's just giving it a shorter period of time for our trend, and it keep going up. And then we see right here it crosses back down, And then I add my 50-day moving average. Let's see. So I just go to settings again. Right here I go to MA on the side, and I go to settings, and then it'll do the same thing. We want our 50-day moving average, and I change mine to red. So that's what I do. I change mine to red, and it's just to give me, more. It just gives me more, organization, so I can know what I'm looking at. Because if all of these moving averages were the same color, I wouldn't know what I'm looking at. And then you're just clicking on the length, and then the 50, when you put in 50, it's literally, it's adding up all the prices from the past 50 days. Adding up all the prices from the past 50 days, and divided by 50. And when I say the prices, it's the closing price. So right here might be a closing day right here, and they'll add up 60.49, and then we'll say right here is our next day, and they'll add 59.65, and I'll add them up, for 50 days, and then we'll get a plot. We'll get a plot right here. We'll get the plot right here. That's just what that is. And right here, let's see where so we can find something now. 1 second. Okay, so what you want to do is, you don't want to click right here at the bottom. You want to go to your 30-minute at this top, and you want to click on it, and then you'll scroll down, and you'll click on 1 day, and it gives our 1 day view. And basically just think about it like this: the longer period time that you do, all of this is just information. It's just, you can go by the minute. You can go by the minute. You can go by the 15 minutes. You can go by an hour. It really just depends. What you. Hold up, y'all. Let me charge my computer. But basically, just like the longer period of time that you choose. I want to see how to say this. The longer period of time that you choose is more, let me see how to say it. I'll show y'all when I pull up the RSI and all that. Then y'all kind of understand where I'm coming from when I pull up RSI. But you'll click up here and then click on 1 day, and then it'll show you another chart. So this is our 1 day chart. This is our 10-minute chart right here. And you just put everything together. When you doing a technical analysis, you literally looking at all your charts, you looking at all your indicators, and you giving an educated guess of what's gonna happen tomorrow. That's all I do every time. Or you'll see the same thing that already happened one time. You'll see the same thing that already happened one time, and you'll end up knowing what's gonna happen, because everything really repeats itself, to be honest with y'all. I can probably show y'all in the 1 week. Oh goodness, it's the week chart. I don't know. Let's see. So this is 1969. They show all this data from 40 years. Yeah, CBS can definitely get the 110. I'll say that. And basically, y'all just see the same thing happen over and over again. and y'all kind of, see, y'all kind of see what happens, and then y'all, later on you'll see it again, and you'll be like, oh, this finna happen, let me, do this. And that's what really, make you, good when you see the same thing over again, because the same thing happen over and over again. But yeah, we'll go to that. So I'll go to my 4-hour chart again. I'll just look at my 4-hour. And basically we got our 20-day, we got our 50-day, and then I'll add my 200-day moving average. And it's really best for y'all, like, to be honest with y'all, it's really best for y'all to kind of, look up, more stuff, like, I might not cover everything, that I learned, but what I did was I went on TD Ameritrade and I looked at every single video, and I got a better understanding of what everything was. And not the little 2-hour videos, just those little minute videos. Right here we'll put in our 200-day MA, and we'll have our white line, and that'll be our 200-day MA. And basically when our share price crosses the 200-day MA, we get it's a longer trend. It's just a longer trend. It might do all of this, but it's still trending up. That's the biggest thing. It's still trending up. It might do all of this, but it's still gonna trend up. And this is our shorter period of time. But the biggest thing is to keep trending up on the longer period dates that you do. So we have our, let's see, yeah, 30-minute loop better. Yeah, we have our 20-day, 50-day, and 200-day moving average. That's what these lines are: 20-day, 50-day, 200-day moving average. And right here, you see right here, it bounced up off our, our 200-day moving average right here, and that's why we have this longer trend, And that's why we have our longer trend. When something bounces up off the 200 MA, it'll most likely, go up for the next week or so. It just depends. But yeah, that's all of our RSI. That's all of our MAs, and we'll add our 9-day moving average as well. So we'll add our 9-day moving average as well. And I just keep it blue. To be honest with y'all, I just keep it blue, cause I know it's gonna follow close to my. Share price. But all I look at when I actually, give out signals and stuff, all I really look at is, oh, did it bounce off of, which MA did it bounce off of? That's what I'm looking at. Right here, you see it bounce off of this 9-day moving average. Oh, I know it's going to continue to go up. Every time it bounces right here, oh, I know it's going to continue to go up. That's why Friday, I seen this bounce right here. On Friday, I told y'all to get in around 74. I say 74, not even 74. I told y'all to get in around 73. 76, and that's because I seen this bounce right here. So I seen this bounce right here, and I started to see a trend. So right here, around 73, 76, I know it's gonna continue to go up. Then it drops a little bit. We get back right here. And boom, we get another pop again. So tomorrow, most likely you'll see CVS go up. So that'll be that. And now I just show y'all my RSI. This is really the biggest stuff, like RSI, where, if something's oversold or overbought. You know, that's the biggest thing. That's the biggest thing I use is RSI. And it's relative strength index. That's my RSI. And I like using TD Ameritrade. They have some good videos. Like, I won't even make my own video because you'll really have a better understanding. You really have a better understanding. So here we go, RSI right here. I did a video from before this RSI. So
let's examine how to calculate the relative strength index, or the RSI.
First, identify a previous time period to use. A time period is generally 14 days, but can be shorter or longer. Next, add up the average gains and divide by the average losses during your chosen time period. The calculation solution, or value, is referred to as relative strength. The relative strength value is then plotted on a graph between 0 and 100. Plotting a line helps investors measure momentum in relative terms, which means looking at the indicator's current value in relation to past values. This comparison may make it easier to identify when a stock might reverse its prevailing trend. To identify potential trend changes, there are two ranges of the indicator to keep in mind: overbought and oversold. Overbought refers to a stock that has increased rapidly in a short period of time and may reverse lower. Conversely, oversold refers to a stock that has decreased sharply in a short period of time and may reverse higher. Now that you know how to calculate RSI and how it measures momentum, let's look at how investors might use this indicator to identify potential trading signals.
And it's really the biggest
Some
one, I
investors
say.
define oversold as an RSI value below 30. When RSI crosses back above 30, it generates a potential bullish entry signal. Exit signals work the same way, except investors use overbought values. An overbought value is an RSI value above 70. When RSI crosses back below 70, it generates a potential exit signal.
Alright, so that's that. You know, and that's the biggest thing. You know, you want to know if something is overbought or if it's oversold. That's the biggest thing. You know. So what I do is, you know, how you set that up. You know, you'll go to indicators again. That's all you do. Relative strength index. They have it. They have all of it. You know. And what I do, alright, I got my stuff right here, and I go to mRNA. When y'all was y'all kept on trying to get in mRNA. I'll go to mRNA when y'all kept trying to get in mRNA. That's one of the ones that I was looking at, you know. And sometimes it doesn't matter, you know. But watch this, and I tell y'all what I mean by, you know, my longer period of times, like with my 4 hours. You gotta look at all of them. You just can't look at the 30 minutes and say, oh, this is overbought, oh, this is oversold. You can't just look at the 30 minutes. You have to look at all charts. So right here you'll see, actually let's see this. Let me go to this one. Alright, boom, right here. Boom, this is our trend right here. So like they're saying on the thing, you know, alright, so I'm looking over here really. So, you know, days come up. Oh, I see it drop again. My RSI is all the way at the bottom. So when it's all the way at the bottom on the video, I see, you know, if it's oversold, you know, you get a buy signal. So right here it's oversold all the way at the bottom. Oversold all the way at the bottom, you know. Oh, it gotta come back up. You know, it gotta come back up. So what I'm doing, I tell y'all to get in mRNA. You know, that's why I give out one call out. Get in mRNA. And you'll see, you know, you making money off it going out. You're just predicting what's gonna happen. You know, the next minute, the next day. You know, if you can predict what's gonna happen every day, you know, you'll make money. And that's the biggest thing we doing. So right here, oversold. You know, we get oversold. You know, we making money off of this share price going up. You know, and it's more like trending up than anything. Because right here you see a trend. It's not just gonna keep going straight up, but we do get a trend. And that's the biggest thing with that. And you'll see right here it gets oversold. And what I'm looking at, okay, it's oversold, you know, which MA is it gonna touch? That's the biggest thing with me. Which MA is it gonna touch? So right here on our 15-minute touched our 9-day moving average. We get a small, you know, we get a small uptrend, and it starts to, it bounces down. That's another thing that happens. You'll see, for something to go back down, it'll bounce down off of MA too. So we go past our 9-day moving average right here, but then we get to our 20-day moving average, and then boom, we get a bounce down. Right here we get a bounce down, starts a downtrend. If something bounces down off of MA, we get a downtrend as well. So we get right here, and right here we're probably oversold on our 5-minute chart. You know, so November 24th, 14:15. So this is what I mean by you gotta look at every chart. You know, you can't just say, you know, you can't tell if this is oversold or not. You know, but if I look at my 5-minute chart, I'm gonna look, you know, 14:15. So I'm gonna go to my 5-minute chart. Let's see. I'm gonna go to November 24th. That's what I was looking at, right? 5-minute chart, 14:20. So right here we get oversold a little bit. So this is our bounce back up. So this is our bounce back up right here. So we get oversold a little bit, then we get a bounce back up. And on 5-minute you can't really tell, but let me go to my 3-minute. You know, you gotta look at all of these charts. You just can't, you know, look at one chart and be like, oh, this finna happen. You gotta look at all of these charts to, you know, make a guess of what's gonna happen. So I go to November 24th again, and this is just me personally. What would I do? You know, 14:20 right here, 14:20 right here. That's what I mean by you can't go off of just one chart. You gotta go off all the charts. So 14:20 right there. It wasn't oversold on my 5-minute chart, but on my 3-minute chart, we get oversold, and if something gets oversold, we get a buy signal. We get another buy signal. So on the 5-minute, you know, the 15-minute, that's why I went up. You know, you thinking, oh, why did this go up? You know, when it did, that's because I go look at my 3-minute. You know, and it's oversold. That's why I was going back up. If something's oversold, it has to go back up. That's just, you know, that just is what it is, and how you'll be able to tell. You know, right here we'll see oversold. Right here, we wouldn't sell right here. We'll keep holding because most likely it's gonna keep going up. And right here you see where it keeps going up. So 14:20, November 24th. So I'll go back to my 15-minute. 14:20, November 24th. Okay, right here. This is what it was. It wasn't oversold on my 15-minute chart. Right here, this was right here. It wasn't oversold on my 15-minute chart, but what I showed y'all, it was oversold. I'll look at Kroger later. But it was oversold on my 3-minute chart, and this is why we had a bounce right here. And when it bounced up, we get another buy signal right here when it moves above our 9-day moving average. And when it moves above our 9-day moving average, I remember when I said if it bounces off our 200-day moving average, we get more of a longer uptrend when it does that. And then also you'll see, I'll show y'all with the moving average. It's a lot of stuff, you know, it's just a lot of stuff you gotta see over time, or you gotta go back and practice. You know, you'll say, oh, this happened then. You'll go back and say, oh, this happened then. You know, you see it happening now, and you'll be like, okay, this gotta do this. And that's just your guess. You know, so right here we move back up, and we keep bouncing up. We keep bouncing up off of our 20-day moving average, our 5-day moving average. We keep bouncing up off of it. And that's what I be talking about when, oh, it's still trending. I keep saying, oh, it's still trending, don't sell. This is why right here you might still be losing money, but right here if you sell, you know, right here you sell, right here, oh, you got a pop now, you make money off of this pop, and then you get another pop right here, and you just keep holding. You know, that's why I be saying to hold more, like. But you'll see right here, on our side we got oversold, and then it went up, and I showed y'all can't just look at, you know, just that 15-minute. Y'all gotta look at every chart. You gotta look at all of these charts. And most of the charts I look at 5-minute. I look at my 10 minute, I look at my 30 minute, I look at my hour, I look at my 4 hour, then my 1 day, and then my 1 week chart. Those are the main charts that I look at. But right here, you'll see RSI. Like I was saying, RSI is oversold. If it's past this dotted line, we're oversold. If it's past this dotted line, we're oversold. That's what oversold is. If it's past this dotted line, that's what I mean by oversold. And if it's past that dotted line going across, this gives us a buy signal right here. We buy right here, we make money off of this pop. We make money off of that pop. And then right here, you see the share price. You see the share price going over our dotted line. So over our top dotted line, and that's giving a signal that it's overbought. So I say, oh, y'all need to get out. I say, oh, y'all need to get out. So y'all end up getting out right here, and on the way down, you'll see it go down after that. But when it goes down, it might not hit oversold. It might not go all the way below this line before it pops back up. This is just a signal. Every indicator has a flaw, really. Yeah, you buy when it's oversold. That's literally what you do. You buy when it's oversold. And if y'all look at the videos and stuff, y'all really get a better understanding. All of this stuff is real simple. All this stuff is real simple. All I look at really, if this is way below here, I'm saying, oh, I need to buy this because it gotta go back up. I put in a call right here. Right here, I put in a call. Oh, it pop up, we make money. And then right here at the top, we're overbought. So I get out my trade. That's what I do. I get out my trade. That'll be a good exit. It'll be a good sell. And right here, I say, oh, put in a put. But it might not go all the way back down oversold. It might bounce off one of my MAs right here. And right here, you see it bounce off my 200-day MA. We get another uptrend signal. It's going to keep trending up. But since it bounced off my 200-day MA, it's going to trend a lot. It's going to trend a lot longer. It's going to trend up a lot longer if we get it bounced off our 200-day MA rather than our 20-day MA or my 50-day MA. And right here you'll see, oh, right here we get overbought. Right here we get overbought. And we'll want to sell. But what's happening is, throughout this time it keep going up. Right here, this is the flaw. This is the flaw with RSI. That's why you can't just use one indicator. That's why you gotta use all of them. You gotta put your 9-day moving average into place. You gotta have your 20-day moving average into place. You gotta have all these MAs into place, plus this RSI. And you gotta give a predicted, you gotta predict what's gonna happen. That's the biggest thing. You wanna predict what's gonna happen, but you gotta use every indicator to get the best prediction. Because right here we get an overbought signal. But right here, it goes down, but right here, we keep bouncing up, and right here it stays overbought for a long time. And if you was to put a put in right here, it'll keep going up, it went up, $6 more, you'll lose money right here on this way up. And it just keep going up. So you can't just rely on the RSI, you gotta rely on more than the RSI. Right there, it keeps going up. But like I was saying, you can't just rely on this 15-minute chart. You gotta look at your 4-hour chart. So I'll go back to, November 24th. So right here, we get this bounce right here. We get a bounce right here. It's not overbought yet, but we get this bounce right here. And then it moves up too much. It moves up too much. That's what's happening right there. It's moving up too much. And when it moves up too much, we get all the way overbought. Like this is what I was saying when I kept telling y'all, y'all don't want to put in. This is happening it happened for 2 days. I was telling y'all don't like you just stay out of stuff when stuff like this happens because you can't go off the indicators. You just stay out. You just stay out. You know, you just want to catch the pop. You just stay out. You know, that's the biggest thing. You just want to stay out when stuff like this happens because right here, you know, people put in and it dropped all the way down, and it has to drop all the way down if it's overbought, and it'll really drop a lot. It'll drop a lot more just because we're on our 4-hour chart. You know, we have more data. We have more data. But right here, you see the tank from right here, and it's going down. So we get overbought right here. Really, I couldn't go off of nothing. You know, I didn't even know when it was going to drop. I just knew it was going to drop soon, and that's why I was really telling y'all to stay out. You know, of mRNA, and it did make that drop. But basically, we have our, you know, you get not just look at the 4-hour chart. You know, we look at our 1-day chart too, and what's happening with mRNA. What's happening with mRNA is it's too overbought. But what may happen, you know, it can do the same exact thing as this right here. It can keep trending up. Because we keep on bouncing up off our 9-day moving average. We probably got 3-day moving average, and it can bounce again. And I look at my 5-day moving average. Basically, the difference between a call and a put. A call, when you bet on a call, you're betting for it to go up. When you do a put, you're betting for it to go down. That's what a call and a put is. But basically, this is our RSI right here. This is our RSI. And you gotta look at all of these charts. So right here on our 5-day chart, it's you know, it gotta drop. It's gonna drop. It's gonna come. I'll be honest with y'all. It's gonna come down to, you know, it's gonna come down to, you know, 90s again. But what can happen is, you know, it'll stay in between the 150s and the 140s until our 9-day move. Until our 9-day moving average and our 20-day moving average catches up to this price. But anything that gets too high, it gotta drop. Right here, our week chart. This is our week chart, 1 week chart. Our 1 week chart is overbought. It has to drop. So I'll look at my 1 month chart. You know, this is really just telling me, oh, this is gonna come back down. It gotta come back down soon, but that's more long term. You know, it's more long term. Like, it'll happen a month later, probably. You know, it'll probably be good for another. It'll probably be good for another week. You know, I'm just staying in for another week, and then after that, you know, I don't know what's gonna happen. You know, I just leave mRNA alone. I'll go to something else. But that's what our That's what our RSI is. It's just telling us if it's oversold or if it's overbought. You know, and right here y'all kind of see. You know, I'll go to mRNA. I'll go to mRNA, and you'll see right here on my 30-minute, it actually passes our 9-day moving average, and we start a downtrend. So right here, when it dropped like this, right here I get a signal of it. Right here I get a signal for a downtrend. Right here, you get two. Yeah, that's really it for right now. I'm gonna just